I do think that it's already happened, right? Because those 13Fs are 45 days old. So in the last 45 days, a whole bunch more has come in. And every day that we keep making higher lows and higher highs, there's going to be more accumulation. And, we just had the first red dot on plan B, right? So the red dots are the parabolic move time. And so the next 12 months, I think the next 12 months are going to be truly spectacular.
Welcome back to our channel. Bitcoin ETF have become a pivotal element in the cryptocurrency landscape. Mark Yusko highlights that, as of the latest data, there have been $60 billion in inflows into these ETF, with $10 billion flowing out from GBTC Grayscale Bitcoin Trust. This results in a net inflow of $50 billion into Bitcoin ETF. Although this is a significant amount, it is just 1/6 of the $300 billion Yusko initially projected for the first year. Despite being behind schedule, this level of inflow is substantial and indicates a strong interest in Bitcoin as an investment vehicle. One of the key points Yusko emphasizes is the importance of institutional adoption. When BlackRock submitted their application for a Bitcoin ETF on June 15th, it marked a turning point. BlackRock's involvement signaled to the market that Bitcoin ETFs were not just a possibility, but an inevitability. This confidence is crucial because it reassures financial advisors managing trillions of dollars in assets to consider Bitcoin as a viable investment.
Right now, I think the last I looked, it was 50 billion. It was 60. I think it was 60 billion. 60 billion of inflows into the ETFs and maybe 10 billion of outflows from GBTC. So it was like net 50. So AUM had gone to 50 billion. Well, 50 billion is 1/6 of the number that I thought would happen in the first year. Okay, so we're a little behind schedule. I thought we'd be at 150, about 120 billion by now. So we're a little bit behind schedule. And I do think that it's already happened, right? Because those 13Fs are 45 days old. So in the last 45 days, a whole bunch more has come in. And every day that we keep making higher lows and higher highs, there's going to be more accumulation. And, we just had the first red dot on plan B, right? So the red dots are the parabolic move time. And so the next 12 months, I think the next 12 months are going to be truly spectacular. When BlackRock submitted their application, June 15th last year, I was like, okay, it's over. It's happening. There will be an approval. I even gave a date, right? I said it was going to be, January 8th. And I was off by 2 days, so sue me. But I said, this is going to happen. And why was I so sure? Well, once BlackRock said, yep, we're in, and they and others who really don't want this to happen, meaning what's this? This meaning the creation of a new financial system based on blockchain. They don't really want that because they like the rent taking that they have. But bottom line, once they said we're in. Now, why did that matter? Because once January rolled around, there's 30 trillion-ish, call it for a round number, 30 trillion of boomer assets, mostly boomer assets, controlled by financial advisors. Okay? When those financial advisors got the memo that they had to get off zero, right? They had to get off zero. 10 basis points. That's 30 billion bucks. Okay? 30 billion bucks would have an impact on the price of Bitcoin. But 1%, which is not even a crazy number, 1% is 300 billion. 300 billion is more money than has ever been, more currency, more fiat, than has ever been converted into Bitcoin in the first 15 years of its life. People say, no, it's $1 trillion asset. I said, yeah, but $1 trillion has not gone in.
Right.
Only a couple hundred billion have actually converted into Bitcoin. Okay. The rest is bid-ask spread and appreciation and network increase, Metcalfe's law increase. So if you add 300 billion to an asset that hasn't had 300 billion go in, big moves were going to happen. And so, but your point about, well, which institutions were also going to come in, I'm just old. I've been around a long time and I've allocated these people. So I know, one, how much capital they have, two, how forward-looking they are, and three, the type of liquidity they need in order to put their capital to work. Because we're talking billions, not, thousands or millions. And so once there was this platform, BlackRock et al., because once they approved all of them, now we're talking real money is going to come in. And Coinbase, gets adopted and is very stable. And so all of these things start to happen. And then the one that no one's even talking about is they put a little rule in at the very end where you had to have, what they call it, an authorized participant, an AP. I can't remember what AP stands for, but it's basically you have to have somebody legitimate stand behind you if you want to be an issuer. And JP Morgan said, yeah, we'll do it. Like, didn't your CEO say this was like a Ponzi scheme? So why are you willing to help with custody and transactions? And so once all of that happened, it was absolutely positively going to be fund after fund after fund. Now, the one little wrinkle, like everyone's like Millennium, they own 1.9 billion. Nah, kinda. I mean, on the day of the filing, they had long 1.9 billion. But the way Millennium works, most of their assets are long and short. So they're short something else. In many cases, they're probably long IBIT, short MSTR, because MSTR is selling at 1.7 times the underlying value of the Bitcoin. That's probably too high a premium. The leverage gives you some premium, but 1.7 is probably too high. So they're long that. They're probably, some of them are probably long IBIT and actually short Bitcoin. They actually might have a Coinbase account somewhere where they're short. Some of the underlying portfolio managers inside the Millennium umbrella. So it's not quite as unidirectional as saying, oh, yep, they own 1.9 billion long, because there's a whole bunch of shorts on the same. Same thing with jump trading or Susquehanna.
The institutionalization of Bitcoin represents a significant shift in how cryptocurrencies are perceived and utilized. Yusko points out that institutions converting fiat into Bitcoin are doing so with the expectation of long-term appreciation. This shift is driven by the need for financial advisors to diversify their clients' portfolios and the growing recognition of Bitcoin as a legitimate asset class. Yusko draws parallels between the evolution of banking and the current state of Bitcoin custody. Just as banks emerge to safeguard individuals' wealth from theft, Bitcoin ETFs provide a secure way to invest in Bitcoin without the complexities of self-custody. The history of money, from physical security to electronic storage, reflects the ongoing evolution towards secure and accessible financial products.
What's happening now is people are converting fiat into Bitcoin with the expectation, to your point, that it's going to be worth significantly more later. And that is a massive change. It's a massive change. And we've been talking about it for a long time. I mean, you and I have been talking about it, and other people have been talking about it, that getting off zero, like having more than zero, was inevitable. Right? There was just no way everyone wasn't going to have some exposure. Now, it doesn't have to be 80, 90, 100%, like some, degen or some early investor that got, I shouldn't even say investor, someone who was lucky, right? running drugs on Silk Road, got a bunch of Bitcoin, never sold it. That's worth a lot. The institutionalization of these baskets or holders or vehicles that people can transact. Because imagine being a fiduciary and you did that. You copied all but the last paragraph and you sent your clients money. You thought it was going to Coinbase and it went to the ether. That would be bad, right? So the idea that you can transact in this wrapper and someone else does
ETF, meaning the ETF.
Yeah, the ETF. And someone else does all the technology. And I know the hardcore Bitcoin maxis are like, no, not your keys. No. I'm like, fine. Look, I got it that in a perfect world, total self-sovereignty and total control off the grid in your cold storage, definitely perfect and ideal. And in the future, but the problem is in a world of bearer assets, you've now reintroduced a whole bunch of risks. Like, you and I have talked about this. I don't like the fact that it's kind of like the bad old days where you got to sit on your porch with your gun and hope that someone with a bigger gun doesn't come and say, hey, give me your Bitcoin. You're like, well, no, that could never happen. Well, of course it could happen. It's a bearer asset. If you have the seed phrase, someone can take it from you. And that's one problem. And so banks were created because people used to have all their wealth in their house and the bad guys would come steal it. And I'm like, well, let's put it in a bank. And then the bad guys would just go rob the bank. And I'm like, well, let's get bigger banks and then let's find a way to make it electronic and store it in New York. And then you can have access to it. And that helped, right? I would say, how much money's been stolen from the Fed? $0. How much money's been stolen from Bank of America's home office in New York? $0. Bank of America, El Paso, Texas. More than $0. How about People's Wall Safe? More than $0. I don't have a wall safe behind the sign, by the way.
So on the other wall.
Yeah, other wall. It's that other wall. How about your purse? Lots. People lose money out of your purse or wallet all the time because it's far from the origin of the money. So how much money has been stolen from the Bitcoin blockchain? $0. $0. Not one hack, not one, $0. How about from Coinbase? $0. How about from smaller Mt. Gox-esque exchange? More than $0. How about when people are trying to transact? More than $0. How about People's Wallet? More than $0. So the further you are from the source, the more at risk it is. So we do need to figure out ways to manage OPSEC, right? I mean, Jameson Lopp is awesome about this. Now, no one's going to mess with Jameson, right? They tried once, they swatted him, and it was a very scary thing. But now he's on a compound somewhere with his AR-15s and all his other guns, and no one's going to mess with this guy. But there was a time where people were trying to mess with him because they knew as a core developer, he had a bunch of Bitcoin.
One of Bitcoin's strongest security features is its blockchain, which has never been hacked. This record contrasts with traditional financial systems where theft and fraud are more common. However, exchanges and individual wallets are more vulnerable, highlighting the importance of secure platforms like ETFs for mainstream adoption. The approval of multiple Bitcoin ETFs marks the beginning of a broader acceptance of cryptocurrency ETFs. This development paves the way for other digital assets, like Ethereum and Solana, to be included in future ETF offerings. The institutionalization and regulatory clarity provided by these ETFs will continue to drive mainstream adoption and integration of cryptocurrencies into traditional financial systems. Please like and subscribe my channel.